Good evening, everyone. Thanks. So this is our spring break edition of our webinar. Thank you so much for joining us this evening. My name is Rima Rasool. I'm joined by my colleague, Bhuplesh Gupta, and we'll be walking you through a very focused discussion on our latest EB5 opportunity, Legacy, that is currently open and time sensitive. Um, Today's session is about one thing, how to approach EB5 the right way, and how to evaluate a project that's structured for both immigration success as well as your capital protection. And I'll use one of Buplesh's lines here, that, yes, legally your money has to be at risk, but does not mean that your investment has to be risky. And Buplesh, would you like to say anything to start?
Oh, yes. Thanks, Rima, for the introduction. So my name is Bhuplesh Gupta. I'm the Vice President at ZEN EB5. ZEN EB5 is a branch of our development company, Zen Investing, where we do the EB5 business. So I'm pretty excited to be here. As Rima said, um, the main mantra in EB5 is even though your investment is at risk, but it doesn't need to be risky. So that's where we come in. We bring in the project where we have de-risked most of the stuff we can and try to give a project which not only gives them peace of mind from their investment, but also for their immigration point of view.
And should we move disclaimer? Basically, for everyone, please note that this presentation is for informational purposes. And any investment decision should be made after reviewing, obviously, full offering documents, et cetera, consulting with legal counsel. This is an informational presentation. We're not offering any legal advice or any financial advice here. All right. So I think this is, the big thing that's hovering over everyone who's thinking about EB5 right now. It's the time sensitivity. So what does this mean? There is a very important timeline that all investors should be aware of by now. We are currently in a window where EB5 benefits are protected under the current program structure, the Reform and Integrity Act. This protection, known as grandfathering, so to be in this current rendition of the EB5 law, ends on September 30th of 2026. So what does that mean? After that date, there's a real possibility of higher investment amounts and policy changes. So timing very much matters. But we do already know, within the RIA, it is already structured and written that from January, there is going to be an increased investment amount. That is all dependent, on inflation. And from what I understand, and please correct me if I'm wrong, but I think the number that's being thrown around is somewhere between 930 and $950,000.
That's right. So basically, when the RIA was written last time, there was a clause in that every 5 years, the investment amount will be revised based on the inflation in last 5 years. So that's due on January of 2027. So there's no doubt about it. The investment amount will increase. Um, as per the industry experts, when they did this math of the inflation since the last investment amount, it's coming out to be anywhere around $937,000. But again, when they do this math in December, we'll know exact amount, but it will be more or less somewhere between 930 to $950,000. So, but if you file your petition before September 30th, 2026, the investment amount is locked to 800K. It will not increase for you.
That's correct.
Okay.
Alrighty. And here is where we are going to talk a bit about the latest visa. And Baplesh, I'll let you.
Okay. So I'm sure like everybody have seen the latest visa bulletin. I mean, that's a Bible for EB5 right now. In fact, I used to be in that boat when I was looking for my green card. So the visa bulletin came yesterday, and as per the latest visa bulletin, the set aside categories or the reserved categories in EB5 are current worldwide, including India and China. So that's a great news. USCI has not taken any action on that. But if you noticed last couple of visa bulletins, especially January, February, and March, the dates for EB2 and EB3 progressed significantly, and people who had a priority date of 2015 or 2016, in fact some were in even in 2017, were very hopeful that their dates will be current and they will be able to file adjustment of status. um, well, first of all, that advancement in the dates were unplanned, probably due to some restrictions on a couple of countries. But that has now passed. If you see the April and May visa bulletin, there is no change in the May visa bulletin that signals that there won't be any further um, dates advancement for rest of the year, at least till September. In October, when the new fiscal year starts, there will be new dates. But as far as my understanding is that there won't be any more date changes for rest of the year. So, which means if you are looking into EB5 and you put that thing on hold because of the advancement in EB2 and 3, now you need to start acting again, and you need to act pretty fast because the deadline is coming. And if you start today, your attorneys will take a couple of weeks or maybe 2 months to do your SOF, depending on how complicated it is. And then you don't want to file on the last day. So you should be ready to file as soon as possible. So if you are in that boat and if you have all the funds available, start acting right away.
All right, about ZEN EB5. So let me briefly introduce the platform behind this offering. ZEN EB5 basically focuses specifically on the build to rent and multifamily developments in Arizona. We partner with EB5 Coast to Coast, one of the largest and most established regional center groups in all of the country. Basically, this partnership allows for a clear separation of roles, development and compliance and USCIS oversight on the other. But please, do you have anything to add?
Yes, to add to that, so I when I talk to investors, this is a question I get pretty often is like, why I am talking to a developer? Like usually in EB5, you talk to a regional center, and that's how probably the market is right now. When you go and talk to EB5 and some of the big names, you're talking to a regional center, not to a developer. That's true, but you also need to understand the distinction between the regional center, the NC, and the developer. Basically, you're not talking to a regional center, you're talking to a NCE, because NCE is legally allowed to raise funds, not the regional centers. Regional center, but there are a couple of NCs, or every regional center have NCEs who raise the funds and then deploy into the projects. So ultimately, that whole differentiation or nitty-gritty detail is hidden from the investor, and people think, okay, they're talking to regional center. Nothing wrong in that, but to understand the role of a regional centers are regulatory bodies whose role is to monitor the EB5 program end to end. They monitor the whole funds transactions, they monitor the job creations, and they make sure that each and every dollar is used for only job creation purposes. They have obligation to report all the monetary transactions to UCIS every quarter. So basically, they are the compliance body which sits between the developer and the USCIS. That's their primary role. NC is the one which is actually raising the funds, and the funds are collected into NCE and then deployed into the project, whether it's a debt or a equity, depending on project to project. But that's how the overall structure is. So we partner with EB5 Coast to Coast as a regional center for this compliance work. They are not involved in capital raising, they are only for compliance. So we are NC manager plus developer. So we raise funds directly, which is how the structure is. But since um, there is a lot of like noise in the market, you don't know, you don't understand the structure really well.
That's true. And a little bit more about the regional center EB5 Coast to Coast. So basically, the regional center we work with, that we partner with for our projects, has a very strong national footprint. They sponsor over 80 projects, have raised over 2.2 billion in EB5 capital, have more than 1,000 investor filings. And they also maintain 100% USCIS project approval track record, which is very important. Not all regional centers are created equally. Let's put it that way. Their level of experience is absolutely critical in EB5, and that's why we choose to partner with them for our projects. We actually were designated status last month, but we for these projects we are partnering with EB5 Coast to Coast and Population. Maybe you want to talk about that a little bit?
Oh, so last month, yeah, we ZEN EB5 got their own first regional center. So going forward, all the projects will be with our own regional center, and that's how the rest of the the businesses are. So we'll be in the same boat, but for this project, we are using EB5 Coast to Coast as a regional center. Okay.
Okay, so now let's talk about the development team because this is really what you need to know. Across projects and leadership experience, the team has delivered over 65 projects nationwide. The team has built over 12,000 units and returned approximately $130 million of equity to investors. I'm sorry, inequity to investors. And basically at the end of the day, like this is not a team of first-time developers. This is not the first project ever developed. Um, for over a decade, we have experience of building and exiting projects. And I think, for investors looking, for security in their capital, that's really what you all have to look at is the development team and how experienced they are. And these are the people that are, figuring out how to spend your money correctly, what to do. Baplesh, you want to talk about this a little bit?
Yes. So, many times I get this question, okay, what's your track record in repayment?
Yes.
Now I ask them question, are you asking this to me as a regional center or as a developer? And you need to understand the difference because ultimately your money is being deployed in a project and that's where your money is going to come back. Regional centers cannot return your capital unless it is returned by the development team or the project. So it's very important that you understand the project, the track record of the development team. Okay. Obviously, each project is different. You have to review each and every project very carefully. Past performances does not mean that the futures will be same, but it gives you a sense of whether the team knows what they're doing. We as a development company have done more than 65 communities of the same style, so we know this business very well. We have been building BTR projects. We have been developing and exiting the BTR projects, which means we understand this business really well. And we have optimized the operations, the constructions so much that proudly I can say that nobody in at least in the Arizona market can beat us in the BTR space. Okay. And that's very important for you to understand because you want to give your money to an experienced team who knows how to use that money wisely and return it on time with all the terms agreed upon. And we have always been very proactive with that. We have attained a reputation that we always return the money on time and as per the terms of the agreement with all our lenders. So again, when you ask this question next time to us, obviously we would love to work with you or to anybody else. You need to ask the question, what is the track record of the developer in of the project in which I'm investing, not the regional center. because regional center is just a top level layer. They are the middleman between you and your money, right? So it's very important to understand the track record of the developer.
Absolutely. And again, the regional center is there reporting to USCIS, and that's part of the entire EB5 process and why it's so transparent and it's, so safe for investors right now, in this current rendition. And so that's always something that people get a little bit confused about. The regional center are not the ones returning your money. One more time, it's the development team at NCE, which is our internal fund administrator, the place right here. And so, it's always nice to have a conversation with that person, with that team. Uh, I don't think every project with every project you actually have the opportunity to do that, but with Zen you do. Alrighty, so why Phoenix? Why Phoenix? Whenever I speak to an investor who's been to Phoenix, they totally get it. I don't really have to very much go into this, but our projects we build basically in the Phoenix metro area. Phoenix is currently one of the fastest growing cities in the United States. Population growth, job creation, and housing demand are all aligned. That's just how it works. This is not a market, this is not a speculative market. This is not a rural market. This is a proven growth market year over year over year. And that's why we currently have five housing developments, not all of them EB5, but we currently have five housing developments in construction at the moment because here we go. This is Viplacia's favorite slide, so I'm going to let him.
Right. I mean, that's right. I mean, there's a reason why we are building so much in Phoenix, and the reason for that is that the growth, the opportunities which are there in Phoenix. Um, it's number one city, fastest growing city in the United States. It's the fifth largest metro, going to be fourth in next 2 to 3 years.
Absolutely.
And some of the reasons why Phoenix is growing so much is the amount of opportunities and the businesses it supports. For example, TSMC, we all know TSMC, we all are from tech background, right? TSMC is world's biggest chip manufacturer. They chose Phoenix for their first plant, which they initially started with a budget of $6 billion, but eventually they spent $65 billion. Given the success of this plant last year, they announced five more plants in Phoenix area with the investment of $100 billion. Now we all know that if they started a project with 6 billion, it went up to 65, when then where the 100 billion will land. Okay. That is why if you see all these red stars, that's where we are doing that's where our Zen projects are. Now that's the projects in construction. So we are actively looking at more and more deals, and we just closed one more deal right over there, just 3 minutes from TSMC. That won't be an EB5 project, but that's um, that tells that like we do trust a lot in this area. We see a lot of opportunity, the growth opportunity. There are more than 100,000 jobs within this circle. That creates a huge rental demand in this area. Okay. And TSMC, when it came, it not only came along, like they brought their vendors, suppliers, which is creating another new ecosystem of um, um, new jobs, new housing requirements. And also, if you ask me 5 years ago, what was the demographic of this area? It was mostly like blue collared manufacturing jobs. Um, the you see, this is I-10. Just below I-10 is the biggest logistic hub of West Coast. All mostly blue collared job. But in last 5 years, actually, since the TSMC came out, the demographic of this area is changing. It is transforming from a manufacturing to more tech hubs. Now, more and more data centers, AI centers are being developed in this area. The reason for that is the TSMC and also the cheap electricity, which all these data centers and AI centers get. They can take advantage of that. That's why the demographic in this area is changing significantly. Lot and lot tech people are moving into this area with high paying jobs. and they are creating a huge rental demand for the communities like us. Also, if you go to the next slide, last year, OpenAI and TSMC, Oracle, and few other partners announced investment of $100 billion in partnership with SoftBank. SoftBank, we all know, it's one of the biggest venture capitalists in the world, which is investing heavily into the tech and AI companies. They are trying to invest. They had a plan to invest $1 trillion into the Phoenix market to make it world's biggest AI mega hub. Okay, now that the whole investment and the development will take at least a decade, but the work has already started. TSMC is building actively. So that tells why we chose Phoenix and why we are building so much in Phoenix. Okay.
Right. And this is a rendition of Legacy. Obviously, as you know, as we discussed earlier, these are a townhome community built to rent, which means that, these are for family, very well built, clubhouse, pool, etc. But at the end of the day, it's just like really good, wholesome family living. I wouldn't call these like luxury estates, but they are, as you know,
Well, I would call
140
them
units.
as like future ready smart homes,
Yes, future-ready smart
which are
homes.
built
Absolutely.
for um, the next generation young families.
And everything you would want living in the desert, really. Every unit has, this is the desert. Every unit has, it's
um,
it's basically.
right. In fact, we just went and did a tour of our another project, which is about 80% complete. She's right. It's a desert, and to give it like a desert-like feeling, we are adding misters in every backyard so that
Mhm.
people don't have to struggle with the heat when they want to enjoy the backyard in the evening. They can just turn on the misters and enjoy the weather. So a lot of thought has been put together into the designing of these units to make it more eco-friendly, more livable and enjoyable.
Absolutely. We are I-956F approved. We are approved in the HUA category, meaning that we can offer our investment at the minimum 800,000 level with, in the reserve category, meaning that, faster processing time. We were given, for this particular project, we actually have a 100% buffer on the job. So basically, for every investor, we're creating 20 jobs, not 10. All of the jobs will be created by next July, so that's within the next 15 months. We do have a 3-year investment term with 2 optional extensions of +1 +1, meaning that our projected exit will be Q2 of 2029. The capital repayment will be either by sale of the entire property as an income producing asset or refinance of the property to exit out everyone in our NCE, meaning all of our EB5 investors. Again, projected for Q2 2029, which is a 3-year investment term. We do have a developer-backed project completion guarantee. We do have a job creation guarantee, and as I mentioned, with a 100% buffer per each investor. And we do have an I-6E denial refund guarantee, meaning, in the worst case scenario, if for whatever reason, except for fraud on your part, you are denied your I-526E from the USCIS, we do guarantee a return of your capital. But Please, do you want to say anything about that?
I think you captured it well. So basically, this property or this offering is structured in such a way that you will get your money back in about 3 years.
Mhm.
The construction of this property will be about 22 to 24 months. So we are looking to complete the construction by Q1 of 2028, and then we need about a year of renting, or what is called as a stabilization period, to stabilize to the maximum potential of this income producing asset, because any new buyer, they would want to see that what is the potential of this property, and how much income it can generate. That's why 3 years is a very sweet spot. We are planning to start construction by end of next month, or maybe the first or second week of June. We got most of the permits. We are just waiting for last few grading permits. But after that, there's nothing else from stopping us to do both horizontal and vertical on this property.
I have a question from one of our attendees. Is there a maximum cost guarantee by you for the project? I'm not sure. I'm not sure what that means. Maybe you would.
Yeah,
And
I
then,
got it. I
okay,
understand what he's trying to say.
okay.
Basically, I think he's asking for a max price guarantee. So the way it works in real estate development is when we work with the GC will give you that the the cost of the project cannot exceed certain limits, and that's what is the GMP contract done between the GC and the developer. And yes, there will be at that we will be signing a contract by mid to late next month. We don't sign the contract upfront because the GCs don't like to sign the contract months in advance because the cost could change. So we sign the contract just before we are ready to start construction, so that they have most up to date data on the cost of every material which will be used in this thing. So yes, every project we do is protected, where the cost cannot escalate beyond what we agreed upon.
And then just another quick question, that if you can explain the project completion guarantee.
Okay, so this is an industry standard that whenever we work with a bank or institution for financing a project of this size, they would want us to sign an agreement that says that whatever happens, we will finish the construction, and that's the personal guarantee which developers gives to the bank or institutions, saying that we are committed to complete the construction of this project. And generally, the developer's assets are attached to that guarantee, which means if for some reason we are not able to complete the project, then the bank could come after our personal assets. Okay, this is a very standard practice in a real estate world. Um, but I also know some of the projects where they don't do it. Basically, you have to look for whether an institution is involved in the capital stack. If an institution like a bank is involved in the capital stack, they would definitely want to see this personal guarantee. So that is another thing which is very important when you are doing a due diligence on a project, to make sure that a bank or institution is essentially involved in the capital stack, because if they are involved, they will make sure that there is a personal guarantee given by the developer to make sure that the construction will be completed.
Perfect. And should we go to the next slide?
Yes, please.
Already more renditions of legacy. As you can see, that basically, here we go. Is the meat, I think, the real
Okay.
bread and butter of this.
Um, One
Did
second.
we?
Here we go.
Okay, here we go. So here is our capital stack. As you can see, the total EB5 raise million from 20 investors. But what about the capital stack?
Yes. So the cost of the project is $55 million, and that consists of our money of $8 million. That is towards the purchase of the land, the entitlement, and the pre-construction work, and 16 million from EB5 loan, and 31 or remaining from the senior lender or the bank. However, the bank has already approved a loan of up to $44 million. We don't need to withdraw everything from bank up to 44, but that gives us an option to go as high as 44. And if you do the math between us, the developer money and the bank, we are pretty much there. We have covered more than 95% of the project cost. And that's very important because that means that the project is not dependent on EB5 capital to for completion. The project will once start, it will just continue whether we raise our EB5 money or not. That's very important for you to another point in your due diligence, that what's the dependency on EB5, because EB5 raising can take time and it's unpredictable. Sometimes it can happen within a month, sometimes it can take a year. Okay. Uh, you you don't want the project to be just lingering around because of the lack of the funds. Developers don't like it, GCs don't like it, subcontractors don't like it, because everybody wants to um, have a very stable flow of funds. So that is only possible when um, the money is there. So we as a development company don't start a project unless we are more than 90% covered, so that we know that the project will finish without any dependency on any other source of funds. In this capital stack, the role of EB5 is just to reduce the cost of the capital, because once we get all $16 million, we are going to reduce the bank share. Instead of drawing $44 million, we will be withdrawing only $31 million. And also there is a little bit of cap, like $3 or $4 million, that is going to cover that. So that's the purpose of EP5.
So basically, the project is not dependent on EB5 money, and I think that's something that you really have to look at, especially when you're looking at these mega projects that have tranches and tranches of investors coming in. Our projects, I think, are right in the sweet spot. They're not very tiny, they're not very big. And basically, EB5 money is coming in to replace bank money at a lower interest rate. The project does not depend on EB5 money. And I see a question here that says, what happens if the project defaults? Who gets repayment first? Bhupesh, you want to talk about that?
Um, okay, that's actually a very broad question. Like, what happens when there's a default? The definition of default can vary from project to project, but let's say worst of the worst happen and the project is stalled in between, and it could not proceed further due to whatever reason it is. Bank always has the priority on repayment because they are the senior. There's a reason we call them as a senior lender, because they are the senior position, so they will have a first right on the money. Okay. um, EB5 will be sitting just below the bank. So first bank will be paid, then EB5, and then if there is anything left, the developer will take out. However, we have something, and I was waiting for that for this question to tell you that we have arranged something which remove this whole debate, that who will pay and what will be the waterfall, at what conditions and all, because we have a third party repayment guarantee. The guarantee says that no matter whatever happens, like if in total 5 years, that is a 3 years initial investment period plus two extensions, if in total 5 years the project is not able to pay back the EB5 loan, then the third party guarantor will return the money to the NCE, which means all $16 million will be coming from the third party in the event the project is unable to pay that $16 million back to the NCE, which it has taken as a loan.
That's right. And what does that mean, really? Is that legally, your money is at risk. Everything is, on level as it's supposed to be. However, and I always talk about this when I'm, doing my one-on-ones with investors, is that, the way that these our projects are structured, we really have our investors in mind, and it's all about security and making you feel like uh, just safe. And I think that's what this third party guarantee is all about, is that at the end of the day, in the worst case scenario, the economy is just, falls out and the worst possible thing. That NCE, the fund in which the EB5 money is collected, will be replenished in a 3+1+1. And I really feel like people need to understand that this is what really differentiates our project from other projects in the market right now.
That's right. That's right. And this guarantee, again, a lot of people do question, Then what about the at-risk condition set by USCIS? Your money is still at risk because this guarantee is not directly tied to you. This is a
Correct.
guarantee between the project and the NCE.
That's correct.
You as a partner in the NCE or a shareholder in that NCE do have right to that money, but it still honors the at-risk clause set by the USCIS, but on the same line, it also gives us opportunity to have this guarantee between the project and the NCE.
So, but basically, best case scenario, as projected, as we, have a record to do, is to exit on projection, by sale or by refinance, just depending on the current market. You will get your return in Q2 of 2029. Absolute worst case scenario, the worst of the worst of the worst, it's a 3 + 1 + 1. And I'm just answering the last question about the best case and worst case scenarios for, yes. So the worst case scenario is a Q2 2031 exit for the NCE. Are there any more questions about this particularly, or
I think we can move
I
forward.
think we can move on, yeah.
Okay, now the second part of this capital stack is like the exit. So as you said, we are looking to exit in Q2 of 2029 via the sale or the refinance of the property. So since this is a um, income producing asset, the valuation of this property is not done like you do a valuation of a single family home. When you go to market to buy a single family home, that is driven by a lot of factors like the sentiments, the demand in that area, and things like that. But uh, a commercial real estate, even though this is a residential complex, it is considered as a commercial real estate because it's an income producing asset. The valuation of this asset or the property depends on how much income it generates. Okay. So in 3 years, we are looking at income. So in a minute, I'll show you how we came with that number. We are looking at valuation of about 71.8, or you can say roughly $72 million. And given the cost of the project being $755 million, we are looking at about $17 million profit, the gross profit from this project. And that's another thing you want to look in a project, like how profitable the project is. Is it like what are the project margin? Too thin, too high? What you should be looking. If the project is margin is too thin, then there is no room if there is any fluctuation in the market. Let's say the economy is not doing that well, the demand is not that high. A very thin profit margin will not be a good option for a developer to exit. So that's why you want to have a project with a good profit margin. Now, let's come on to how do we came up with this number. So we'll take each scenario one by one. First is a sales scenario. Again, as I said, this is income producing asset. So when we evaluate income producing asset, we look at the net operating income. That is the net income this asset will produce in a year. And that NOI is derived from the gross income, like the rents, all the other fees, like tech fees, pet fees, and all other kind of fees, minus all the expenses of this property. For example, the maintenance cost, the management fees, the insurances, taxes. If we deduct all of these things, what is the net income? And on this asset, we are looking at a NOI of about $4 million in 2029. When we apply a cap rate is the rate at which a business is valued. Okay. In current markets, the cap rate of this type of asset is below 5%. We have seen properties being sold at 4.75 to 4.9, but we are being very conservative when we are applying a cap rate of 5.5%. So NOI divided by 5.5% is what the valuation of the property is. That is like $72 million. And then on top of that, there will be some expenses when we sell, like the broker fees, the closing cost, etc. We are looking at a net proceed to the developer of $21.6 million. That includes the payment of the construction loan as well as the repayment of the EB5 loan. Okay. And the next scenario is the refinance scenario. Again, for refinance, the math is same. The lender will look at the NOI, and then applying the same cap rate, it will come up with the valuation. And based on that, they'll say, okay, how much loan they are willing to give. Usually on a new construction project, lenders are willing to give anywhere from 75 to 80% of the project, of the valuation of the property. But we are here looking at about 68% um, to come up with a very healthy DSCR number. This DSCR number is what is the debt services coverage ratio. That is the income divided by the debt, or in the other sense is the principal and the interest payment. So 1.25 is a very healthy. Lenders are willing to go as low as 1.1, but we maintain a 1.25 to be very healthy. With that being said, in that scenario also, we will be comfortable, be able to pay off the construction loan as well as all the EB5. So in both cases, refinance or sale, we are very comfortable in paying back both the construction loan as well as the EB5. Any questions on that?
And again, if you want to go through one-on-one, on a Zoom, we'd be happy to speak to you and just let us know if you want to kind of go through this more detailed and just personally, we can do that as well.
Yeah. Yeah, we are always here to help you.
Alrighty, so investment terms, fast track. Um, as we discussed earlier, we are an approved HUA project, meaning we can offer the minimum investment of $800,000. We do have a standard admin fee of $80,000. However, if you're working with Baplish and I directly, we are very happy to completely waive that for you. Our preferred return on this project is 1% per annum. It is a loan term project. This is not an equity project. You're loaning money to the JCE as an investor and partner, limited partner in the NCE. As we discussed earlier, it is a 3-year term with a projected exit in Q2 of 2029. Of course, early repayment is possible. As we just went through, to exit, either sale or refinance, just kind of depending on the market at the time. And this is something that we offer on all of our projects, which is partial payment flexible funding. Partial payments are accepted. You can reserve your spot today without having to fund the full $800,000. It's a $25,000 hold. Is fully refundable. You can see our offering documents for full terms and disclosures. If you're interested, a bunch of you that I see on here do have our investor link. For anyone who wants our investor link, just ping me. I'd be happy to send it to you. You can legally access our PPM, our financials, even this deck. And Baplesh, you want to talk about the flexible funding a little bit?
Yes. And before that, I also want to talk about this loan option. So, in EB5 industry, there are two primary ways in which the money is lended to from the NC to the project, whether it's a loan or a equity. Um, it's very important that you pay attention to that thing, whether it's a loan deal or a equity deal, because many times there you will see advertisement from very attractive, okay, 4% return, 5%, 6, 7. I have also seen like 7% returns, and I asked them, okay, how can you return 7%? What is the math behind it? So it's very important to go and look into the deal, whether it's a loan deal or equity deal, because a loan deal is backed by a promissory note, which means if they say it is a 2%, 3%, or whatever percent is, it's backed by a promissory note, which means you are guaranteed to get that much return. An equity deal is not backed by any kind of promissory note. They can say 10% return, but end up giving you nothing. It all
And
depends on the general partner, how
that's right.
how they decide when it comes to the repayment. So it's very important to go liquid into these things, whether it's a loan deal or equity deal.
And I know I talk to so many investors who think that, oh, but I want to do equity, and they think that's more advantageous for them. But always read the fine print because, as Baplesh just mentioned, in an equity deal, there's a fluctuation where your return is not set in stone. And so, as you know, as we always say, read the fine print, go through the PPM, make sure you understand what you're signing and what you're getting yourself into. Um,
In fact, today I created one on slide on that because a lot of people ask me this type of question. I thought, okay, let me put a slide on that. Let's go through it quickly. But coming on to the partial payment, yes, we do accept partial payment. You don't need to have all $18,000. Talk to your attorney on what their recommendation is, because what I've heard is that attorneys these days recommend don't go partial for more than 3 to 4 months, because USCIS is very unpredictable. They can pick up your application next month or maybe in 6 months. We don't know.
right.
However, if they pick up your application and they found that you have not invested all $800,000, they might issue you an RFE or a NOID. Okay, so again, as a project developer, an NC manager, I have no problem in accepting a partial payment. Talk to your attorney and see what their recommendation is.
And that timing for the, period that you have for farms is fluctuating quite a bit. At the end of the day, though, it is fully legal. You can start your process, and I always tell people, all your EB5 designate, like the line that you're standing in for your EB5 has to do with the country you were born in, right? And as time is getting closer to the deadline in September, we see a lot of applications being put in. And so that flexible funding partial payment gets you your spot in line a little quicker. If you know you're going to be able to be liquid in the next 3 months, 4 months maximum, it is something that you should really look into, especially because, written into the RAA, it's completely legal, and at the end of the day, you're then giving a promissory note to the USCIS with your application that's just kind of telling them that, I'm making this payment April 30th, and then I'm making the next payment, May 30th, and then the final, whatever it might be, June 30th. But whatever you do decide, you do have to stick to that then. You can't fluctuate on the
Yeah.
promissory note that you give to the USCIS. And on all of this, obviously, you discuss with your attorney, and you can't do it without your attorney, but these are just options that you do have legally.
Yep.
All right. Regulation and transparency and how the funds flow. So this is really the gold standard of what any EB5 funding and, kind of the pathway and what it should look like. As we both kind of mentioned a little bit earlier, as the EB5 investor, you are an LP or limited partner in which is basically the fund in which all of the EB5 money is being collected. And then from that fund, it flows into the JCE, which is the project itself. And then reverse the same way around. When we're exiting, the money flows from the JCE back into the NCE and then back to you as the LP. And this is again where, the regional center comes in and where we come in and who's doing what. So basically, we use the external fund administrator proxy, again, gold standard. And what's happening there? So basically, when you as an LP are getting ready to invest, your attorney is going to tell you, okay, we're ready to put your money into escrow. That escrow account is holding your money. This is before it even goes into the NCE. And these are all new regulations that have been brought by the RIA, the Reform and Integrity Act, in 2022. And you won't, I don't think you can even imagine the work that goes in from the fund administrator, from the regional center, from the JCE, all of the paperwork that just to get your money out of escrow and actually into the NCE. It's not the wild, wild west. Let's put it that way. Your money isn't flying here and there and everywhere. It is very, very extremely regulated. And that's what the fund administrator is coming in, verifying your investor eligibility. And there are very, very, strict conditions before any fund movement happens, even into the NCE. And all of this, then, when your money does finally enter the NCE, then the regional center is coming in and monitoring and reporting every single transaction that's being made to the USCIS. In the background, we as, Zen are also, we believe in transparency. This is a lot of money. This isn't like money kind of throw here and there. People work really hard for this 800,000 to kind of put it together. And we are also reporting to you as to, where this is going to happen. This action is going to happen. Again, with the RIA, your money can only be used to create jobs. And for nothing else. And that's kind of where the regional center monitoring is coming in. And then, we're very lucky to have Laplace, who is our internal fund administrator on the Zoom with us right now. And I'm sure he's going to have, a little bit to say, but, the current, which is why this September 30th date is so important because this is basically what can be changed and messed with. And at the end of the day, as someone who's been working in EB5 for over a decade, I can very safely say that this is the safest, absolute safest time there's ever been for investors in this program. And Baplesh, do you want to say anything about the fund flow?
Right, means before the RIA was implemented, the fund management was not very well regulated. That was the biggest pain point of investors, and the government took this matter very seriously, and they came up with very strict laws of how the money can be moved from different entities. At every point, we need a third-party fund administrator to review the money transactions. They look at all the conditions set in the PPM to make sure that all the conditions are satisfied before the money flows from escrow to NCE. Once the money is in NCE, NCE behaves like a bank where the project will submit their draw request every month with all the supplementals like construction invoices or any kind of invoices. The NCE reviews, when I say NCE, the fund administrator proxy will reviews those draw requests, and they'll make sure that everything is according to the EB5 guidelines. Then only they will release only that much amount, not the entire. Let's say the NCE has $10 million sitting in that. A proxy will not release $10 million. They will release only whatever the invoice says. If the invoice says $1.2 million, it will release only $1.2 million, and rest will be still sitting in the NCE. Okay, so it's a very regulated system to make sure that the money is used only for the job creation work, and the developers cannot misuse your money.
Absolutely. And like, an unmonitored investment, let's put it that way. So, question you ask, oh, here we go. Is this a rural project? And the question you must ask, how is my capital protected and my green card secured? But please, you want to talk a little bit
Right. I mean,
about this?
this is something I keep on hearing every day, and I'm sure you must have also asked this question. Nothing wrong in that, but I think most of the people are asking the wrong question. Is this a rural project? And I asked them why. What is so important about rural project? They said because it's a faster processing. I said yes, agreed. It's a faster processing, but is your money safe?
Right.
Okay, that is the because as Rima said, $800,000 is not a small amount. For some people, it's their entire life savings. You
Absolutely.
do not want to invest in a project just because it's a rural project, which gives you a few months of extra advantage in processing.
That's
You
right.
have to look everything. Okay, that's why the right question is, with this project investment, is my capital protected, and what are the chances of me getting green card on time? Okay, that's the right question. So again, when you talk to any project developers or regional center or NC manager next time, you should not be just asking, is this a rural project? You should be asking a question, how is my capital protected? Okay, and how is my green card protected? Now, there are certain ways I will try to give you some idea, but again, you are free to choose your own methods. These are some of the questions I have compiled based on my own due diligence and based on the my interactions with investors for last since we started doing EB5. Um, Basically, now we don't have time to run through all of these things, but here's the high level idea I want to give you is number one is when you look at a project, okay, first of all, number one, read the documents yourself. Okay, don't trust somebody with your money blindly. Do not trust what I say, what Rima says, or what XYZ says. Take the paper and read it yourself. It's not that of a rocket science. Generally, the PPMs are anywhere from 60, 65 pages to 120 pages, right? In that, 30, 40 pages is just an introduction of the principles and various other parties. You don't need to pay attention to all of that thing to understand the project. Okay, rest is like 30, 40 pages. Just spend 1 or 2 days to read that thing and try to understand what is written in there and then see whether it's matching with the marketing material or not. Okay. If you are not able to do that, throw it to LLM and ask questions on that. Means all of us can do these things today. Just send the document to ChatGPT or Gemini or Cloud and ask questions
That's
like whether this is a safe investment, what are the risks involved, what are the chances of me getting my capital back. Second, look at the capital stack. Most important, what is the capital stack composition? Is there an institution in the capital stack? If there is no institution or a bank in the capital stack, that's a red flag. That means the developer is just banking on you. When I say you, the EB5 for their project. That's the biggest red flag. Run right away. Okay. Institutions are not only important for the financial, but also from the project due diligence because when a bank fund a project, they go through the entire vetting process. They have a team of professionals who is looking at the deal very carefully, more carefully than I can do it and you can do it. Okay. We have been doing real estate for decades now, but I still amazed sometimes the issues they find in our underwriting. And that's nothing wrong. It helps us make our deal much and much stronger. Okay. So it's very important to have institution because they not only provide the money, but they also provide the professional due diligence on the project because they care about their money to be period. They care about their money. They don't want to put their money in a risky deal. So having institutions is very important. And try to understand the business model behind the project. When it comes to whether it's a hotel business, do you understand the hotel business? If it is a rental residential, do you understand the market? So try to understand the business model behind the project. Um, what is the dependency? What is like dependency on EB5 for this project? Lesser is better. Just like I said, like we don't have any dependency on EB5, but there's some projects which might have some. There are some projects which are heavily dependent. Again, that's a risk level of risk you're taking. Like how much you're willing to risk your money for these kind of developments. Okay, what is a job question? Like how many jobs the project is creating per investor? More is always better because in real estate industry things can go up and down anytime, so you always want to have a very decent question. I always recommend at least 50%, but anything 30-40% is also okay. We have 100%, but having that question gives you peace of mind that if don't go as planned, I still have a lot of question available to protect my immigration status. Okay. Again, there are a lot of questions over here, but there's only few we can talk today. Again, this presentation will be available to you to read through it. And if even after that you have a questions, don't hesitate and set up a call with either Rima or me, and we'll be happy to answer any of your questions. Think we are running over time. Do we have any more questions?
I think we went through all of the questions that we had.
Okay. All right. Sounds good. So again, I think we are almost at the end of the presentation. There are some like green lights and red lights in the project. Again, we have mostly covered all of it. Um, so go through this presentation yourself. And again, if you have any questions, do let us know. We are here to help you make a
Absolutely.
decision.
Absolutely. And we're here if you're not haven't retained your attorney yet, we'll be happy to make you. Just, reach out and, we'd love to sit down if you want to go through this one-on-one, live, asking questions throughout. We'd be happy to do that as well. In this project, we do have 20 spaces. A few have been taken, but this is a project that just got approval last month, so we've just started marketing it. And we'd be very happy to work with you. To reach out to us. And other than that, as always, we wish you the best in your EB5 process and take care. Have a good night. Thank you for being here.
Thank you. Have a good night.